Oh, aloha, everyone. Holy moly, the long signals continue to just be absolutely overwhelming. I don't recommend anyone be as insane as me, but living on Maui, I have all the time in the world to manage hundreds of positions. Does it hurt my overall returns? Yeah. However, I've always made it said there were a lot of great traders in the 80s and 90s that still think that you can trade this way, i.e., the Can Slim All Stars, and that you can magically pick the one stock that's going to move 25% in 2, 3, 4 weeks and 100 to 200% in a year. That it's easy to do. You just pick four of those and you hold those four. 20-25% of your capital into 4 or 5 stocks. You hold those 4 or 5 stocks and they're easy to hold uptrends in hindsight whenever they review the trades. In real time, it's basically impossible to know which stock is going to be the amazing runner and which one isn't. Doesn't matter if one stock has amazing EPS and sales growth and the other stock doesn't have any EPS and sales growth. You just never know which one's going to run. So with that being the case, with the new long positions, I continue to always recommend 10 stocks, 10% of your capital per stock. Make sure whatever stock you do invest your capital in, your inherent risk on that one position is 5% or less. So if by the final sell stop, there's a 10% risk, and the first sell stop, there's a 5% risk, that's a 7.5% total risk to your position. That's not a good trade. And or you only use the first sell stop, so you only use 5%. But you keep doing that, rinse or repeat, and with the reward risk ratio being over 60% and our winners beating our losers by more than 2 to 1, in time, you're going to beat the market. You should be able to double the averages returns, especially in margin accounts using my methodology. So with that being said, let's get to new long positions. The highest quality new long positions are TREE and PLUS. Both of these stocks are Can Slim quality and perfect speculator quality stocks. Tree is ever so slightly extended from its 20-day moving average, so the position size must be cut in half. But PLUS, being Can Slim and perfect speculator, this is a 4% of the account capital long position, but I want you to notice something. An extremely thin name. Now that being said, it's a tight trader, but still, it can have some wild movements, and in the future, there could easily be a flash crash with a thin stock like this, and you could get shaken out of your position. So keep that in mind. But PLUS, want to get long, 80.15, the high of the day since it's not extended. First and only cut loss should be right here, 77.85. Me, I am so fully invested. So few stops triggered today, and the ones that did in names that I don't have either a large position in or started off with a small position. So I barely raised any cash today, and I have very little buying power. So for me, my first stop's going to be here, but I'm also going to keep an extremely wide and loose final sell stop all the way back here. But like I always say, that first stop loss level goes, my next stop level gets immediately moved up. Now, following PLUS, there's Tree. Tree's halved because it's extended, but it's Can Slim perfect speculator, so 2% in Tree. You got that bullish engulfing candle over candle pattern. PLUS, by the way, is a bullish engulfing true engulfing candle over candle pattern. Tree is just really a candle over candle. It almost was engulfing, but missed it by a few cents. Still, it's close enough. But the candle over candle on heavier volume than the session before. Momentum trending oscillators confirming. Want to get long at 236.55. First cut loss 226.13 right here. Final cut loss right there, 218.65. Moves below that level, I'll be out. And then the next highest quality position is an ad signal in Boeing. I'm already long Boeing, but unfortunately, with all this heavy turnover here, this stock moved below this low here ever so slightly, knocking me out of half of my Boeing position. No big deal. It looks like I'll just be adding it back because I don't have enough money to add to my position and then buy back the shares that I lost. So I'll just be buying back what I sold off, but it's an ad signal. It's perfect speculator quality, Can Slim quality. So with it being an ad signal, the 4% is reduced in half, 2%. And with it being extended from the 20-day moving average ever so slightly. Oh, excuse me. This one is not extended from the 20-day moving average. The 5, 10, and 20-day moving average is only touching the intraday price range. None of these moving averages are in the real body of the candle, which means on a short-term basis, even though it's not super extended, it's slightly extended. So once again, 4%'s in half, 2% for an add signal, and since it's technically extended still slightly, it's only a 1% add position. But the bottom line is you need to follow and obey the limits and stops. Limit is at 241.93 the close. First cut loss level, 234.29. Final cut loss level, 230.94. And then whenever it comes to the long signals, they have the green bot, XL. I passed on UVE yesterday because I am swamped with way too many long positions. But you see the candle UVE did? The bullish hammer candle right at the gap up support lows the next day. Boom, it worked. So that's what I'm looking for XL to do. Gap up, held the lows Tuesday, held the lows Wednesday. Higher volume, BOP is increasing, bullish hammer candle off those lows. So I'm going to go long XL since it's canceling quality. I believe it has an EPS rating of 90. Limit order 40.65. It is not extended from its 20-day moving average because the 20-day moving average is above the current price. First sell stop 39.82. Final sell stop 39.09. So even if this position fails, I don't risk much. So if you're expecting this position to move higher immediately, this is one you could buy a lot of because your inherent risk in this position is right around 5% total. If even that, if you use the two stop levels. So it is an idea, but still, you got to realize this is a catalyst trade based on the stock being completely washed out and then better than expected situation arising from the two devastating hurricanes that hit Texas and Florida. So XL, limit order 40.65, 39.82, 39.09. Cancel quality name only, so only 1% of the account capital. The two add positions, EVBG, this is basically a buyback signal. Add signal because it's a pocket pivot point signal right off the 50-day moving average. Normally would not take a stock like this that's extended from the 5, 10, and 20-day moving average, but it's an add signal. I keep getting shaken out of partial positions, so got shaken out here, got shaken out of some of it here, but because it's still holding these lows here, I still have a position. So I want to buy back and add, but I can't because I'm limited with my buying power and cash. Right here with the pocket pivot point signal at the 50-day moving average. Limit order 23.53 since it is extended, so no using the high of the day. First cut loss 21.83. The big price bar, bullish price bar right here, low. And then final cut loss on the add. You could use 22.40. It's really splitting hairs, or you could just use 21.56 if you like because it's close enough. Me, that's it. I'm going to be a little bit more loose. Probably just that one final stop right here on the position. Because like I said, I don't even have remotely close to a full position that I want right now in this stock or any new recent long positions because I am limited in cash, fully invested. Had even a lot of stops triggered today. They were just all very small portions. They were either like AJRD hit like another stop. That was like only like another quarter of the position. Now half my stop gets raced in today's low a day with it closing below the 20-day moving average. But it was like little stops like that. You know, an IDXG fail for basically break even. That's not going to raise a lot of cash. So, you know, until there's some real market pullback, I'm not going to be able to raise any significant money. H&H, one of the prettier charts out there. EVBG is technically prettier because what do you not see down here at all? Red BOP. Look at all the green in this chart. Look at all the green tall volume bars there. One there, one there. Look at all the green here, all the green in the price action. That's what I'm looking for. They're rare. They're hard to come by now, but at least there's one. And here's kind of two. It only has one red price bar, so if you get rid of that price bar, this is a pretty pattern. H&H, want to get long. Limit order, 32.85. First cut loss, just like the last add signal right here. It's going to be 31.95 and 31.65. And from my original long position right here, I still have a final cut loss level of, I believe, the gap fill. And then I also have a cut loss level here. And then I have a cut loss level here. So for this add signal, I won't be placing a stop here. It's all going to go right here. I'm going to give it some room to work. Because like I said, I can't get a full position in any add or new long signal when I'm so fully invested and everything is working and few stops are triggering. No huge gains, but if you want to know why, this is why. We got a VIX near 10. If this VIX was up here, or God forbid, up here, like back in 2008 or 2010 or 2011, it'd be a different story. But for now, it is what it is. Aloha. Great luck today.